Alright, yes guys, welcome back to another video on the channel. Now, I know you've seen a lot of videos on YouTube and you're getting sick of seeing multiple ICT traders making videos which is not leading to anything. They're beating around the bush, you're left at the end of the video, you haven't learned anything, and also you're the same consistently unprofitable trader with no direction, and week to week, month to month, and every single year you're seeing no improvement. So what I've actually done is put so much effort into one video, and one video only, that includes absolutely everything from destroying prop firms and abusing them, understanding the model, risk management / account management, so you never ever fuck up and lose your account again. Never. So single-handedly in this one video, I'm guiding you through everything. Everything you need to know. Absolutely everything. So all I ask from you guys, from behind the screen of watching this video, because you are just watching this video, I would just love if you dropped a like. And if you drop a like, then I know I've dropped a banger video. And if it's a banger video, it puts a smile on my face and I'll be like, okay, cool. At least they actually liked it. You know, I might have put in a couple hours of work to make the video, but at least it benefited a couple thousand people. I don't know how many people are going to see this video. So without wasting any time, listen from someone who's made over $3 million trading ICT concepts. Let's get straight into it. Okay, so here it is. Everything you need to make real fucking money and put it in the bank. Everything you need. Like, we're not playing games. It's free education. Let's get into it. I know you guys are itching. So these are the results from last year, 2025. Why would I even talk to you guys if I wasn't going to present results? And I'm not talking a couple $100, I'm talking money. So money that moves. Money that changes your life, okay? Full transparency. Each month through last year, you can see how much I closed up on the month or down on the month. You can see where I had losing months and winning months, which months stood out from the others and which kind of didn't really. So you can see the first 6 months, if you actually add up the first 6 months of 2025, for me personally, it was relatively slow and I didn't see much of a gain on my portfolio. However, the back 6 months, from August, September, October, November and December were absolutely extraordinary. And that's where I made the majority of my money. I made just shy of $1 million in that 6-month period, in the back 6 months of 2025, across all of my funded accounts, and majority of the P&L coming from my live accounts. So I also had positions in the crypto space as well, where I closed out this just one Ethereum position for $150,000-ish profit. I actually can't remember how much I made, but this was the execution, and that's when I sold the position. It was worth 206k at the time that I closed out. I actually bought Ethereum in Marbella in Spain last year, and I bought it around, I think it was March or April time, yeah. And Ethereum was sitting at around $1,300, $1,500. It was at a very good price, and I bought Ethereum after it took a point of sell side, and there's many other fundamentals that played into me actually taking that trade, and I took that long on Ethereum, ended up closing it out in August as Ethereum took all-time highs, and it was absolutely extraordinary trade. And not only did I take that Ethereum position, I was also in a Bitcoin long. So in 2025 January, I was in a Bitcoin long that I entered at $33,000 Bitcoin. I ended up selling that Bitcoin position once price took just over $100,000, around 105 for Bitcoin's price, which was also another huge trade that I took during that period. Now I'm actually in another trade now, and it's actually very close to being over. I took a short in August. Now these are swing positions that I put on the side. Now everyone in the Discord has access to this as well, and many of them have actually taken these swing positions alongside me trading live, month to month, every single year, trading the Nasdaq inside of macros. We move the money from the prop firms into live accounts and also into swing long-term crypto positions as well, and also into real estate, which I educate people on, because I do own properties in Dubai, and they are all off-plan projects which are going to be handed over in a few years, but we'll get onto that at a later date. I mean, that's something that we only discuss really inside of that group. I mean, if you guys want me to discuss it on YouTube about real estate and taxes, you know, let me know in the comments if you want to see that, because, you know, I can definitely make a video on that, and I don't think many people even have before, because they don't have the expertise and the knowledge that I've gained over the years, and the money has to flow somewhere, so I went into real estate. So this is, obviously, I'm just going to wrap this up here. You can see this is someone in the Discord, $36,000. That's my brother Dom. He's absolutely killing it. He's done great work in 2025. I think he did over $200,000. Fucking great. We have Camilla, 40k approved. You can see that was literally the other fucking day. So this is in January. So she got ticked over in January with the P&L at the start of January. It was absolutely extraordinary. It was up 8.6R, and then we closed January for around 4.5R. So we had a few losses at the end of January, which brought our P&L down. I was up over 300k at one point, and then I closed the month. I think I only made around 150k, which is still a very, very good result if you put it as far as P&L. I mean, even if you look at this one, this is Take Profit Trader. She secured another, I don't even know how much, probably 45, 50k plus on Take Profit. And then this is also me just taking a couple withdrawals from the live account, but who cares about that? Over 1,200 trades there. You can see the win rate, 57%, based off a 2-to-1 risk to reward. And this is at exactly how much you would have made last year if you see at the bottom of the screen, running 38 50k accounts. And in this video, I'm going to show you how you can get that. How you can get this many prop firm accounts and make more than what it says here. Okay, so stick around. Trust me, I'm giving you guys everything you need. So you really want to be around for this video. It is unbelievable. So 35R last year is how much I made as a P&L for 2025. Now, across 38 accounts, that would give you a non-scaled 400k USD, which most people would be like, holy shit, that's crazy. I wish I could make that much money. It's not wish, it's what we do. And then you can see on scaled, and what I mean by scaled is that you've built up your drawdown on the 50k account to a 4.5k profit, and now you're risking 600 per trade to make 1.2 per account instead of risking 300 to make 600 per trade. Okay, so obviously you've doubled your P&L by the end of the year, which is 800k instead of 400. Okay, hopefully that makes sense. We're getting straight into it. Daily bias based purely off imbalances. Now, I really want to explain the way that I do bias differently from everyone else in the ICT space. I handcrafted the way I do bias myself, based off probabilities and extensive backtesting and receding hairlines. I mean, I've done so much backtesting, probably outdone everyone in the whole space, purely because I'm a perfectionist, and I always believe, just like many smart people, and I wouldn't even put myself in the category of smart. I mean, I didn't officially do very well in school, but I always strive to be the best. I always know that there is room for improvement in all aspects of business, sport, and life. Because I do come from a sporting background, there's always room for improvement, even when you think you're at your best. So, how do we determine bias? We use the daily time frame, the 4-hour time frame, the hourly, the 15, and the 5. Essentially, we use the higher time frame draw, and we correlate it with the intraday draw. Now, one thing to understand is that when you are taking a position inside of a macro, you're taking a position on the 1-minute time frame, and you have an expectancy of that trade to have a draw on the next 5 and 15 minutes, because that's usually how long a trade shall last. My average trade length is around 8 minutes and 30 seconds. So to build a bias only off the daily and the 4-hour time frame is not going to give you enough of a perspective on where price is actually going in the next 15 to 30 minutes of price action. Hence why we get the full picture of both higher time frame and 15 and 5. I am going to show you guys in the chart in a second. I just want to read you this. Slow route is the fast route. If you don't know, slow route is when you turn up each day, and even on that week you may only add one more 50k account, or that week you've improved yourself by backtesting the model, adding certain criterias, and just making small improvements. By the end of the year, you've completely outdone someone who's tried to rush it and sent themselves back to square one, and they're in that gambling cycle, back to square one, and they are getting tired, and they end up giving up or blowing their fucking brains out because they've absolutely lost their mind. Now, you, by the end of the year, you've absolutely demolished and destroyed your goals. Your goals of what you set were too low. A bias is created from the most recent trade into a fair value gap on each time frame. A bias can also be formed from a fair value gap being disrespected / inversed, and we'll get onto that slightly later as well. A bias can be created from an SMT between NQ and ES of unfilled imbalances. We're also going to get into that later as well. Now, no one really speaks about SMTs between unfilled imbalances, which is also a thing, the same as where we have an SMT between a high and a low. Okay, and then finally, a bias can only meet the draw once it takes a short-term high or a short-term low, or it meets the opposing imbalance. Now, if you're trading out of a bullish imbalance and you meet a bearish imbalance, then the draw has been met from the bullish imbalance, and now price action's bearish. Or if we're bullish always towards the next short-term high or bearish gap. That is always the case. Vice versa, if you're trading out of a bearish gap, you're always bearish towards the next short-term low on that time frame, and that applies to each time frame, or bullish gap, whichever one comes first. And then that's what we discussed about. It's vital to understand that taking positions on the lower time frame and forming only a higher time frame bias is factually incorrect. You must incorporate the lower time frame bias / draw and correlate it with the higher time frame to build a bigger picture of directional bias inside that macro, not just the whole day. Okay, so we're going to get into that right now in TradeZeller. Okay, so let's pull it up. Okay, so I've pulled up TradeZeller and we're going to work through the bias, and as we said, we start on the daily time frame and we get a result for each time frame all the way down to the 5. So on the daily time frame, let's have a look at what the bias would be. Now, you want to trace it back slightly. We wicked up into a bearish imbalance, which would be bearish on the daily. Price then trades down, and this candle would obviously be open when it wicked into this gap, trades down and has traded into the bullish gap, and then we see, did the bullish gap get respected? No, it got inversed. So when a gap gets inversed, that also forms a bias, which would be bearish. So the daily is currently bearish towards the next daily swing low or bullish gap. So hopefully that makes sense. And you can write, and this is how I like to write it on the chart, I'll just put 1D bearish, and then we're going to look at the 4-hour time frame as well, and essentially you just work your way down until you have formed a full bias, and whichever is the majority, that is going to be your overall bias. Now if you look on the 4-hour time frame, one rule that you should write down on your paper, if you have notes whilst watching this video, I suggest you actually have notes and write this down. We assume a fair value gap is respected until disrespected. So this previous candle closed to respect, this candle is currently trading open, and it is trading open until 2 p.m, which everyone knows we get a new 4-hour, 10 a.m, and then 2 p.m. So we have 2 hours and 6 minutes left on this 4-hour. So it can very easily respect it or disrespect it. Anything can happen, but we assume that it gets respected until disrespected. So the 4-hour right now is going to be, of course, bearish. Now we can look at the hourly time frame. So let's take a look. On the hourly time frame, the previous candle closed and inversed the bearish gap, which is bullish towards the next hourly swing high or bearish gap. So you want to see, are we trading already inside of an hourly bearish gap? No, we're not. The draw is going to be the next high. Now, if ES has already took it, then that would have already met the draw. Now, at the time of the inverse, you can see this is when we form the bias. And as you can see here, this high was already taken. So we form the inverse on this candle closure. And then this candle here has then taken a high, an hourly high on ES. So ES has met the draw. ES can meet the draw. Whether ES takes the high or NQ takes the high from the bias, it would then neutralize the bias. And trust me, it may seem complicated at first of the way that we do bias, but you will get used to it, and I suggest you utilize the tool of TradeZeller and backtest it and backtest it and backtest it, just like you would backtest the model, just like a boxer would practice sparring before he actually goes into an actual fight. Now, I do not, and I will tell you guys, have any affiliate codes with any prop firms, TradeZeller or anything at all. That is not what we do, because I don't give a flying rat. So 15-minute time frame, what are we currently trading inside of? A 15-minute bearish fair value gap. So the 15 is bearish, and it's bearish towards the next 15-minute swing low or bullish gap. And now we can look at the 5. So if we get our bias from earlier, we got the 15 as bearish, and then now we are doing the 5. As you can see here, we already have 3 results out of 5 as bearish. It doesn't matter what the 5-minute is, what the hourly is, the overall bias as of now is bearish, and nothing is going to stop it. Now, on the 5-minute time frame, we're not bullish, and potentially we're bearish. So let's have a look. You can see that on the 5-minute time frame, we trade inside of this 5-minute bearish gap to the left. Now, if you want to be more precise, I already know because I can see it. You can mark out the gap and drag it across, so you can leave it like that, and you can see on the 5-minute time frame we've tapped into that 5-minute bearish gap, which puts the 5 as bearish towards the next 5-minute swing low or bullish gap. So in this case we have a 100% bearish bias. Now the hourly is neutral, and you're probably thinking that's not 100%, Milo, that's not the strongest bias. You're right, it's not the strongest bias, but also a neutral bias on the hourly time frame means nothing. The hourly's got no sort of conviction on whether it's going to draw higher or lower. So this is all we have, 4 out of 4 bearish bias. That is how you determine bias, and you pair that with a sweeper liquidity, which we're going to get onto. Okay, so another topic that you may have a question of is unfilled imbalances and getting a bias from unfilled imbalances. That might be one of your questions, which is perfectly fine. So I'm going to find an unfilled imbalance for price, and I'm going to use it and utilize it as an example. Okay, so as you can see here, between NQ and ES, now we have a 15-minute bearish fair value gap, which we can use this one. Now, neither asset actually ever traded into this gap until slightly later, which is fine, but we're going to use it as a hypothetical educational scenario. So you can see here on the 15-minute time frame, we have an unfilled 15-minute bearish gap. Now, for example, when we say we can build a bias between unfilled imbalances, such as an SMT between unfilled imbalances. For example, if ES trades up into the unfilled 15-minute bearish gap and NQ, which is the Nasdaq, doesn't, then this would be a bearish SMT to show that the Nasdaq is the weaker asset out of the two. Hopefully that makes sense, which would cause the 15 on the Nasdaq to actually be bearish, and it is acting as a bearish case scenario. So ES has already filled an unfilled imbalance, which is then Nasdaq hasn't, which is a bearish SMT on the Nasdaq, which would mean the 15 would be bearish. Hopefully that makes sense and answers some of you guys' questions. Now we're going to get back into the slideshow because I want to show you guys how you cannot fuck up and get onto the model and look for longevity. Let's not waste any time. So that was bias. Now we're getting on to the main event. Entry checklist, step by step. These are the exact steps that I take every single day for the past 4 years of profitability. 4 years. Each step to taking a trade. You want to follow the higher time frame bias that we just worked through. So you're going to form that bias, and it has to be paired with a sweep of liquidity. Without step 1 and 2 being ticked off, you cannot look at step 3, 4, 5, 6, 7. These do not apply if step 1 and 2 have already failed. Now, how can they fail? Well, if you have a bearish bias, you must have a sweep of buy side. Write that down in your paper. And if you have a bullish bias, you must have a sweep of sell side. That is always the case, and it must always happen for you to go on to step 3. And step 3, in fact, is when we have these two, price just swept sell side, and we have a bullish bias. You're then going to look for a shift in market structure on both assets, and then a gap on both assets. We're going to work on this because I'm going to show you guys 1 or 2 of the trades that I've actually taken myself in January and secured the profit for this month. So with that shift in market structure on both assets, you want to see a gap within that shift on both assets. And then finally, what's paired with the gap? On either NQ or ES, we want to see a breaker block or a mitigation block paired with the gap on either NQ or ES. And it does not have to be paired with both, okay? Just to make that clear. And we must look for a valid stop placement, preferably at the short-term high or low, essentially just above or below all PD rays that will send the trade in favor. So breaker block, mitigation block, order block, fair value gap, etc. And then the macros that you're actually going to be monitoring. So obviously you want to make sure your trade is inside of macro, and an SMT is just a glorified ICT technique. Now, an SMT is just a confluence to an already existing model. And here's the sessions that we monitor. So this is what you're going to be monitoring. If you're in the US, I wouldn't even bother looking at the word London because you are going to be asleep. But if you are a warrior and you don't give a flying rat and you want to make all the money in this space, then you do need to get yourself out of the US and get into a time zone where you can actually monitor all the sessions. And here it is, 2:45 AM to 3:15. That's the first London macro. 3:45 AM to 4:15 is the second London macro. The New York session, we have 9:45, 10:45, 11:45. And then finally, the PM session, 1:45 PM to 2:15. And that is you done for the day. That is all the work that I do in one day. 30, 30, 30, and then an hour and a half. Okay, so within the space of a whole day, we're talking 3 hours of work. That's it. And yes, you are sat there between macros, but between the London and the New York, I get around 5 hours, and I get a lot of work done, or I can do anything outside of trading on focusing on other businesses where I'm also making a shit ton of money, such as my real estate portfolio that I'm looking at purchasing now a villa in Dubai to build the real estate fund. And I'm speaking with a few developers that are going to be able to fulfill my idea for setting my sights on getting that project complete. Inside of London, you're only allowed 1 loss. If you take a loss inside of London, that's it. You wrap up, you close your laptop, you're done. You're going to wait for the New York. If you take a second loss in New York, you're done for the day. 2 losses always stops you. Winning trades, you don't stop. If you have a winning trade in London, you trade the next London macro, and you trade New York, and you trade the PM session. There was a Tuesday inside of the second week of January. I had 2 winning trades in one day. I made 4 hours. It was my biggest day I've ever had in my life. I made close to $160,000. I couldn't believe my eyes. It was unbelievable. Almost what I make in a whole month, I made in a day. Now let's get into the next slide. So screenshot this, write it down. Very important. Revisit this video at a later date. Prop firms, how to abuse use them and how to make as much money as possible. Now, there's two ways you can pass prop firm accounts, and it is not by trading. So if anyone's told you that you need to trade an eval and pass it and say, oh bro, you're such a good trader, you passed an eval, bro. No. So that bro who told you that is completely wrong. You're doing it all wrong. Okay, so if that was the way that you was doing it, you're a failure. So there's a 2-day pass guaranteed. I can't speak about that on YouTube, unfortunately. Now, it's not to get you inside of the Discord or anything, but I generally can't speak about that on YouTube. However, the same day pass CPI, I can. So these are the prop firms that essentially will work for the same day pass because they require no consistency rule on evals. Now, these are all of the accounts that you're going to acquire in your portfolio to become a very, very seasoned and well-developed trader. And you're going to be making an actual well-deserved amount of money to the knowledge that you've obtained. Now, too many people set very, very low goals and don't realize how big of an industry and how much money there is to be paid to you from the knowledge that you've obtained. Okay, it's not $300 a day, it's not $500 a day, it's more or less $30,000 per trade minimum is what you should be setting your expectations as. And you're going to be moving the money from prop firms into your live account, into a real estate portfolio, into crypto positions. Okay, so we diversify, but not diversify where we're opening restaurants. Okay, I tell you guys to ensure that you focus on the business, which is trading and real estate, and that's it. And we do not pay tax. Okay, I don't burn my money, I don't put my money in the drain, I like my money, I don't bin my money. Okay, too many of you guys are throwing money in the drain and you're burning it like you're rich. Are you rich? No. Okay, so do not be paying no taxes. Okay, and I can also advise you on how to do that. So 5 top step 50k accounts, 5 with my funded futures, take profit, alpha futures. These are your A tier prop firms. This is what you start with. You start with these prop firms, okay? So you're gonna 2-day pass guaranteed to get these accounts. It's gonna cost you around $2,500 to get 5 accounts with each firm on a guaranteed 2-day pass. It's impossible to fail with the 2-day pass. I generally can't speak about it on YouTube, but it's unbelievable how many people have passed accounts with that. I think we've passed over 200 accounts within the month of January alone, which is absolutely amazing. So step 1, you acquire these accounts. That's 18 50k accounts. You're already going to be off on a rocket with these accounts, and you're going to be making already a very good amount of money. So once you've got that, you're going to move on to the pink sheets. So we have the pink sheets, the shit prop firms, but still pay. Okay, so they still pay. We're not going to hate on them. And actually, matter of fact, Lucid Trading, Top 1 Futures, and Traderify are actually very solid firms. I'm not affiliated with them, but I do say they actually are very nice firms to work with. Now, so same day pass. Essentially, the way we do it, we actually do this live in the Discord. We did it last CPI, we passed 150 accounts live. I actually got myself 5 Traderify accounts and only recently just passed Lucid Trading, and I'm about to acquire Top 1 Futures because I only found out about these firms within the last few weeks because I'm just taking shit to a whole nother level, and if there's money on the table, you know, I'm going to take it. Why not? It's free money. I'm just going to add it to the stack, add it to Trade Sinker, and you manage all of these accounts. Write this down. Trade Sinker, and you need the $150 plan per month so you can manage up to 120 accounts. Now, can you get 120 accounts? Well, not really, no. It's very, very difficult to get to that point, but get that plan because the plan below it, I believe you can only manage 20 accounts, and you're going to definitely have more than 20 accounts. So you can get actually 20 accounts just off CPI, and you're going to bracket order. Essentially what happens is 30 seconds before the CPI release, you're going to have a lead account and then run the rest of the accounts on Trade Sinker as a trade copier. And you're going to be on TradingView, you're going to set a buy stop 25 points above price, 25 points below price. If you don't understand this process, take a look at my last official video that I made on this YouTube channel, and I actually, you know, explained the same day pass for CPI, but also said that I couldn't explain the 2-day pass, which you guys already know. So, you know, take a look at that if you want to read into and understand this more, or you can just come and watch me do it live, and I'll show you how to do it live, and I'll pass accounts in front of your own eyes. Now, obviously, this one's not guaranteed, but it's got around an 80% chance that you actually will succeed and pass the accounts. So that's another 33 accounts there. That's 51 accounts. Right, so total capital, 2.55 million in capital. And this is how much you're risking per trade. And I'm also going to show you how you don't lose these accounts, okay? So stick around. You know, I'm getting this all out, but I tell you what, this video is an absolute banger. So hopefully you guys are enjoying it and dropping a like, because holy shit, this is really all that you need. And it's took me years and years and years and years to get to this point. So, you know, don't take me for granted. I really hope you guys do appreciate appreciate this video, and it does go quite far. So, risking $300 per trade with a 2k drawdown on each 50k account, running this all through Trade Sinker, okay? That is what you're going to be doing. This is your stop placement. If you're running a 40 handle stop, you're doing 4 micros. 55 handle stop, there you go. 20 handle stop, there you go. So hopefully that makes sense. You're going to be risking on average $15,300 per trade, accumulative across 51 accounts. And on a 2R, you're going to make on average about $30,600. Now, obviously, it's going to be fluctuating depending on your entry and where your TP is, whether you're getting a 2.1R, etc. But that's exactly how much you're going to be making. And this number is pretty much the minimum of what you should be making once you've acquired the knowledge to consistently take the same trades as what I do, okay? So, the next slide is probably one of the most important slides in this whole video. Keeping your accounts and not fucking up. Now, how many of you guys have got funded and fucked up? You've not got paid, you've blown the account, and you've hit the reset button, hence why they've added it to their website, because you guys keep fucking up and you keep hitting reset. So this is how you don't fuck up. And that 2-day pass guaranteed, it was meant to be deleted, but I couldn't be bothered because, you know, this video's already got enough knowledge and it's already too perfect, so I'll leave a little error there. Who cares? The 75% rule, never blow an account again. It's impossible. And if you do blow an account from this, then you are a loser and you actually do not most likely have a profitable model. So, this does not apply to evals, okay? You guys already know how to pass evals. We don't trade evals, we pass evals. Following a 50k funded account with a standard drawdown of $2,000. Every 50k account, apart from a few trading drawdowns, come with 2.5, but it's going to be more or less 2,000. So, if your account ever drops below 75% of its original drawdown, which will be $1,500, which is 75% of 2k, right? So if you drop below $1,500, then you must trade with half position size until you're back above 90% of original drawdown, which is $1,800, okay? So once you actually work your way back up above $1,800, okay, so you've gone from $300 risk per trade, you've halved the whole risk management sheet, and now you're risking $150 per trade, okay? And you're going to risk $150 a trade until you get back above $1,800. So you could do that in one trade, or you could do that in 2 trades, okay? So if the losing streak continues, what does this actually give you? You actually get another around 10 or 11 losses to take from what you've already taken on top of that. So if you actually take that many losses in a row, which we're talking about 11 to 13 losses in a row, then what you're actually doing, my brother, is a very improbable scenario, and probability actually lies against you, okay? So this should save you from 99.99% of scenarios to actually withhold your account and always recover. So essentially, the idea behind this and reasoning is that it stops you from occurring a major drawdown in a losing streak. Now, losing streaks will occur, and if you do not apply this 75% rule, I'll tell you now, you actually will blow your account through the year, because you will take 5 losses and you will take 6 losses in a row, okay? It will happen through the course of a year, and if anyone tells you that it doesn't, they're lying to your face, and they're lying, okay? So you will take losses and you will take 5 or 6 in a row. So that will blow your account with a $300 risk, okay? And or it'll be very, very close, so it'll likely just get blown. So you lose your whole stack, all that progress you made, gone in the bin, just like your tax money. So, and your psychology is protected for your brain to know that you're never going to lose your funded account again. And it would mean that you'd have to incur 11 losses in a row, which in my personal 4 years of trading iced tea profitably, I've never experienced more than 6 losses in a row. Now, 7 could happen, 8 could happen, but with this rule, this shall not even brush our skin. Doesn't even affect us, okay? We're basically Batman at this point. We are invincible. So, apply this correctly and ensure to monitor your funded account drawdown, okay? Do not play it cheeky. Don't think you're a sick cunt, because you may well be a sick cunt, but you shall not beat the market and you shall not beat mathematics and probability, okay? So, when you see your account is even $1 below $1,500, or even when it's at $1,500, if it's on $1,550, you should go half size from that point, okay? So you go half size. Don't be cheeky and think, oh, but the next trade will be a winning trade, bro. It doesn't really matter, you know. I'm just gonna stay at full size. I'll recover, bro. Okay, so a point will come, you'll lose all your accounts. Okay, I'll tell you now. So, what we're actually going to do now is go into the trades that I personally took live with the group. So they're going to vouch, they're going to be in the comments, and they're going to say, hopefully, they find the knowledge that I put out valuable as well. I mean, you know, I try my best. I really do try my best to ensure that you guys succeed. And you will never see anyone on YouTube put this much effort into a video and guide you guys step by step and have the results like I have and what I've done for other people. It is truly amazing, and it is what gets me up each day, because I do love helping people and changing people's lives. advice because no one helped me. And when I was watching YouTube back in the days, I didn't know what to watch. And I watched this person, and then I watched this video, and I got misleaded by this video, and then I got scammed by this video. And before you know it, my brain was spinning in circles. And I was very close to, putting trading to the side and saying, look, doesn't work, and I didn't know which direction to look until obviously I found ICT. Now let's get into the trades that I've taken through January, and I'm gonna go into one right now. Right, okay, so we're on TradeTeller. This is the trade that I took on January inside of the lunch macro, and already previously I actually took a trade inside of the London session and got 2-hour result. So this was a 4-hour day. I made 164. How much did I make? One sec, my bad. I made $168,700 on this day. It was my biggest day ever recorded to this date. And I post all of my payouts, live account statements, everything. I even posted my statement on my live account on my Instagram story, so you can reference everything and see inside of the Discord. I mean, we got countless people taking 40k payouts left, right and center, and that's just from people that have managed to learn from my YouTube channel and also watch me trade live, and obviously manage to leverage and take the same trades as what I do. Now looking at price action, we have a sweep of buy side. So obviously with a sweep of buy side, we must have what? A bearish bias. Otherwise we can't look for shorts. Okay, so automatically when price has swept liquidity, when you look at the macro, you must automatically be looking for that opportunity. We sweep buy side, you look for shorts. You sweep sell side, you look for longs, and that is always the case. It does not matter if price is in a premium or a discount. You could be in a premium and we sweep minus sell side, and you can look for a continuation for longs if that follows with the bias. And you could be in a discount and price sweeps minor buy side, and you just simply look for a continuation for shorts if that correlates with the bias. So let's work on the bias here. On the daily time frame, we're trading in a daily bearish gap. So the daily is bearish, and this is the bias from earlier that we discussed. So obviously it's likely going to change. So 4-hour time frame, if we kind of just work across a little bit, let's have a little look. So you can see on the 4-hour time frame, we are indeed trading inside of this 4-hour bearish fair value gap. Okay, and if you guys want to reference that London trade as well that I spoke about, I believe it was in the first or the second London macro. It was a long, and it absolutely destroyed and smashed 2R. So the daily's bearish and the 4 hours bearish. Let's have a little look at the hourly time frame. Okay, so you can see here we're not trading inside of anything as of this point. We had an hourly bearish gap, we inversed, and price already taken these lows out, so we're not going to actually have a standpoint bias as of that point. And then on the hourly time frame, let's have a little look to the left. So we have an hourly bearish gap, and then these other gaps are not going to be within range. So if you click settings and then you click style, and then you click extend right, your gaps will always extend all the way to the right. Now for the sake of it, I will mark this hourly bearish gap just to be on the safe side, but you can see it's already been inversed, so we already know that. And the hourly, in this case, is indeed going to be neutral. Okay, so it's actually the same as before, which is pretty surprising. So 15-minute time frame. What bias can we get on the 15? So let's see, are we trading inside of any imbalances? Okay, so on the 15-minute time frame, we've gone all the way to the left, and you can see here we do have a few 15-minute bearish gaps. Now, what I do advise when you're looking at intraday time frames for bias, it's very important that the imbalances that you do have for price action on intraday, you actually leave them already marked out on price. You don't have to keep referencing across and referencing across, because in a high pressure and a fast paced scenario, when you need to just flick onto the 5, flick onto the 15 to get that instant bias to see what it is intraday, then you might struggle with that. So if you just leave your imbalances there and label them as they are, if it's a 15, a 5, etc., then you're going to get a very exact bias for that current scenario. So let's go across for price. One thing I'm looking at here, has this imbalance either one been previously inversed, which as of now I can see price has not done that. Okay, so we're trading inside of a 15-minute bearish gap that has never been inversed, so the 15 is bearish. What does that tell us about our bias? Let's go on to the 5. Okay, we have a bearish daily, bearish 4 hour, neutral hourly, so neutral means nothing, a bearish 15, and then as far as the 5-minute, we don't actually care about the 5 because our overall bias is bearish. It doesn't even matter if the 5 is bullish, which as of now the 5 is actually bullish. Now our bias is not even going to change because of that. So now let's drop to the lower time frame. So as we're inside of macro, this is not a shift in market structure. And if we look at ES, okay, you can see on ES, this was also a failed shift in structure. What is a failed shift? A failed shift is when price wicks below a short-term low, but does not close below. That is the first example of a failed shift. Another example of a failed shift would be that price closes below a short-term low, but does not form a gap within the shift. That would be an example, as that price shifted structure, but it did not have enough energy to hold and leave a gap for price. It kept retracing up to take buy stops, and sellers were not strong enough to hold price below the short-term low. Okay, so that's 2 examples of a failed shift in structure. So we swept buy side, we're going to look for a shift lower in structure below the previous short-term low. Let's fast forward price. Okay, so as you can see here, we have a market structure shift on the Nasdaq. Let's have a look at ES and see if we have a shift as well. Okay, so on ES, as you can see here, we have a shift in structure on the Nasdaq and ES. So let's work back to number 1. We have a bearish bias, a sweep of buy side, which those 2 pair, and now we have a shift in structure on both assets. Now the shift in structure is actually left behind a bearish gap on the Nasdaq and a gap on ES. So that's another part of the model ticked off. Now, finally, what is paired with the gap? On the Nasdaq, we have a bullish order block, which consists of a down close candle followed by an up close candle that engulfed the previous body. Okay, so that's a bullish order block. So essentially what price did is it closed below a short-term low and to form the market structure shift, and then disrespected a bullish PD ray such as this order block, which then turns into a breaker block. Okay, so let's go to settings, style, and then turn off extend right, and this is going to be our breaker block, which is paired with this Fair Value gap. So we are going to look for an entry off the gap. Now we also take premature entries for price action, which as of now you guys might be wondering, why have we not taken an entry on ES as it's already tapped the gap and it tapped flush? Now the reason for that being is that NQ hadn't shifted structure until this point. So NQ then shifted structure at 12.11 and we've just formed this bearish order block on ES. Now we take order block entries and fair value gap entries. So as soon as price on ES opens on this next candle, I would immediately take a short on the Nasdaq because ES would then be trading inside of a bearish order block, which is a trigger for entries. So originally, yeah, you would look for a short off this gap on the Nasdaq, so either gap tap on NQ or ES, and a stop placement at the previous short-term high, which is there. Let's fast forward price. Okay, so ES, next candle opens, trades into the gap, but our entry would be as soon as this candle opens. So I got a live entry on this trade at this point here, okay, and then I'm running a 15 handle stop, and I'm looking for a flat 2-to-1, okay, so hopefully that makes sense. A 15 handle stop. So if I reference the Discord on another screen that I'm running, I run 4 screens, okay, so I do like to run multiple different screens. I manage Trade Syncer, multiple different accounts, etc. So 15 points on the Discord is 10 micros. Okay, so we're trading minis here, so it's going to be 10 times the size, but let's do it with 10 minis. Okay, so we're going to be risking, on average, we should be risking around $3,000 because it's 10 times the size instead of $300. You can see we're risking 2.5 because our entry was actually here, but backtesting gave us an entry here. And then we're going to be looking for a flat 2-to-1, where you can see we're looking for 6.5k. Okay, so let's fast forward price, and when you are in a trade, write this down. This is for your notes. This is extremely important. When you're in a trade, your only job as a trader is to manage risk. It's not anything outside of your control, whether the trade runs to TP or stop. It does not make a difference to how you have a perspective of price and say, this looks like a clean trade, bro, or this and that. It makes no absolute difference to where price is going to trade. All you need to know is that price action is in favor of you and you have a probable edge that you are leveraging for price using obviously multiple funded accounts and a live account, and your only job is to not lose more than you should in a scenario which is unalgorithmic. So you must trail your stops, and that's your only job. So at the previous and the first short-term low, which this low hasn't actually been put in yet, you would trail as soon as price takes the first short-term low and you trail to the previous short-term high. That is always a case that I'm able to manage risk effectively. So price has not taken a short-term low here, so there is no point to actually trail as of now. Let's fast forward price. Okay, so as you can see here, at this point price had already aggressively traded in favor, disrespecting bullish order blocks on the lower time frame, etc. So I use this as a scenario and also trading over 75% of the trade to immediately reduce risk all the way to break even, and we had no risk on the table as of this point. Matter of fact, my break even was actually around this area for price, around 26.75, and then let's fast forward price, and just like that my TP got absolutely destroyed. So you can see that was a lovely 2R, very algorithmic trade inside of the lunch macro on Tuesday the 13th of January. Now this does conclude the whole video. I put a lot of effort into this video. Now all I ask from you guys, if you have made it to the end, then congratulations. I mean, some people got the the mental capacity and a brain span to only watch a video for 30 seconds because they're on TikTok like this all day. But drop a like on this video, guys, because it needs to go out to more people, and honestly the amount of lives that we've actually changed changed is why I have this YouTube channel. It is why I created it. It is for complete transparency. Every single day on this YouTube channel, every single trade, every single loss, every single win, everything is uploaded on this channel. You can see everything. So it's transparency, education at its finest. Comment what you want to see inside of the next video. If you enjoyed, I'll catch you guys in the next one. And there is a link in the description if you want to come watch me trade live and learn more and become an educated and financially successful trader. And I'll catch you guys in the next video. Take it easy.